David Shapiro here with the Shapiro Real Estate Group in Austin, Texas, and it is February, so we've got a market update for you. I'm here with Lee Abraham, our SVP, longtime experienced real estate aficionado, and he's going to help us dive into the stats.
Let's break it down.
We're going to give you the top real estate news stories of January here in Austin, answer the question that keeps coming up for people: can prices just keep going up and up and up? How does volatility in the crypto market impact real estate values in Austin? And maybe we'll touch a little bit on stock market as well.
Okay.
Special report, off-market luxury homes. Tell you a little bit about that. If you are a buyer in the $1 million plus price point, what is going on behind the scenes that you're not seeing on Zillow and the MLS?
Yeah, so let's take a look at the market statistics. If you watched our market report last month, the 2021 recap and forecast for 2022, the driving theme was the shortage of inventory. Just historically low housing inventory available for buyers to purchase. And what we're looking at are the monthly housing inventory numbers based on 3 absorption rates. So if we look here at the screen, there were 341 single-family homes for sale as of the end of January, and I ran the numbers last night, so these are fresh, current numbers. Single-family homes only, not townhouses, not condos. 341 listings available for sale.
It's crazy.
Absolutely nuts. Now, the first bullet you see was the average number of sales per month if we look at the last 12 months. So 998 sales a month is the average for the year. Over the past 3 months, that softened up to 851. Not so much because demand was dropping, but because there was less supply to purchase. And then we do have some seasonality. You can see there 531 sold in the last 30 days. So when we look at the monthly housing inventory, it's basically the calculation of the number of houses for sale divided by the number of houses selling per month. We look at the 12-month average of 998 homes sold a month. That gives us about a third of a month of inventory. Contrasting that, the last 30 days, only 531 sales. You've got the same 341 homes for sale. That calculates out to about 0.64 of a month. Bottom line is that 531 is a bit low because of seasonality as well as the lack of inventory. Our guidance going forward, just based on these stats, is that the monthly housing inventory is going to look a lot more like less than half a month rather than over half a month. Just ridiculously low, historically low.
Which might sound like that's what you've heard every month for the last year, but it still continues to be true. It's
Right.
now lower than it was a year ago.
Right.
So when we go year over year and look at last January, it's like, could it go lower? Like, what happens? There's no homes left, nobody's moving, which is, I don't know. It seems like that's the point we're getting to.
So let's break down where that stat's coming from. So on the next slide, we're looking at January closed sales. We just showed you that number in context of the housing inventory. Compared to last January, there were 703 closed sales in 2021, 531 this year. That's down 24.5%, David.
And again, it's not because there's not enough people to buy. There's
Right.
just not enough homes to sell.
Not the demand side, it's the supply side. Now we're looking at the impact, if you will, on the market from that imbalance of supply and demand, and it comes out in price. Excessive demand, limited supply, puts upward pressure on price. Here we can see the average price. This is single-family homes in the city of Austin, $753,141 as compared to last year, which was $658,462. So that's an increase of 14.4% year over year average price, single-family homes in Austin. So here's a number that's up, and you wouldn't expect it in our current market, David. January 2022, guess what? Days on market, they're up. What's going on?
You tell me.
Well, they're up 8%. In January of last year, it was 25 days to sell, and now we're at 27 days. Couple of days difference, seasonality. I think some of the volatility that we had this January played into that. My conclusion is it has nothing to do with demand, has everything to do with just a little bit of seasonality. So
Yeah.
I think we can wave that one off. Okay, so now really is the ongoing story of the Austin real estate market, which is the limited supply, and that's not changing anytime soon. Last January, there were 809 new listings that hit the market. This year, 694. That's a 14.2% drop in new listings. Clearly, that's the direction of the market, and that's what's impacting the supply and demand, the values, everything that we're looking at.
So even though there's more housing units in the city, because every year we do build more housing, there's now less coming online.
Yes.
And main contributing factors to that are low interest rates. People have refied or they've purchased and locked in a low interest rate, and they know it's really tough to buy right now. So why would you go do that when you've already locked in a really low interest rate?
Right.
Those two factors, the second one being the challenge of buying, is like, well, I guess I'm not going to get that bigger home I wanted, or downsize. It's just too challenging right now.
The main point as we wrap up the quick stats is it looks like we're consistent for where we left off at the end of the year. We've got tons of demand, we've got very limited supply, and that puts upward pressure on pricing, and welcome to the Austin real estate market.
So I'll just quickly touch upon the number of listings over time, because this is the trend that we keep seeing. And I'm looking at buying a second home, and as I'm going into that market, I'm like, I wish I had somebody that would do a video like this for that market so I could see what has happened over time. And I think this really does a good job of telling the story. So you can see here's where we're sitting, and this is single family homes. 474, pretty close to the other number that we were just talking about. That's even less than it was last January, down from 537. And you can see the trend, 1,200 in 2020, 1,700 in 2019, and then it continues up. And so what we should expect here, and you can see what happened last year, we got a little more inventory going into April, May, and into the summer. So I would expect the same this year. We'll get a little more inventory, but we're also going to have more buyers coming into the market.
Right.
Because that's just how the seasonality of it works, People saying, well, it's, I'm just getting into my routine in January, I started a new job, or I have a new goal that I want to kind of accomplish. Buying a house doesn't come until the spring for a lot of people. And this is just going to continue to be tough. This is the same chart now, just including all residential, so you can see it tells the same story, essentially. So now this includes condos and townhomes. Off-market properties. So this is a topic that's been coming up a lot of late. First of all, why the heck would somebody even sell their property off market? Well, the reason I get asked that question is, what's the genesis of it? Somebody's thinking, I would want top dollar for my property, and to get top dollar, don't you put it on the market? That is absolutely true. So thinking about why somebody would sell it off market, well, maybe that's not their goal. Maybe achieving the very top price for their home isn't what they're trying to do with selling their property. Many of the off-market listings are over $1 million into the luxury market. So for those people, often money's not their primary concern. There could be something like, hey, I just want an easy sale. Maybe they have a dog. This is something we just came into. We put a property under contract for a client last night that was off-market, and he was a dog owner. He lived in a condo, and he just didn't want to deal with all the showings and having to clean up. And he had a price in mind. He was happy with that price and good terms and a great buyer, and he was willing to sell it off market relatively quickly, just within a couple days of making it known to the agents in Austin that, hey, this is something that could be sold. Was he willing to go under contract? Other goals could be that there's a strategy with the off market. Maybe there's some privacy behind the buyer, the seller. He doesn't really want his property out in the public. Maybe there's an incentive to the buyer of it's not publicly available what it's sold for, so they can keep their taxes low.
I think one of the keys to that is the wide range of quality that agents bring to bear in a particular transaction. On the high dollar homes, oftentimes there's not going to necessarily call it a closed circle of agents that like to work with each other. I think that that's got a lot to do with it, is that there's a certain expectation of the quality depending on of the agent that would be bringing the offer, depending on where the listing is advertised and marketed. So in some of the networks that we belong to, we've earned that sort of membership, if you will, where we're given an opportunity to look at listings that don't make it to the MLS. There's enough demand in some of these off-market groups that we belong to where it's going to get market value or above market value, multiple offers in some cases. But for the listing agent, they're looking for a smooth transaction. They're looking to minimize hiccups and potential pitfalls that might come with an agent that they're not so familiar with. Whereas if you're in some of these networks, that's kind of factored out, and they have a more, higher bar, if you will, of entry to participate. And I think that's really key on some of the more exclusive high-end homes.
Yeah, great point, because that creates a smoother transaction for the seller.
Yeah.
They have an agent that has prepped their buyer better. Maybe their buyers are more qualified.
Yeah.
So there's a lot of factors that go into that. They create a better experience for the seller and a good reason for him to be willing to sell it off market.
Right.
There's a number of reasons of why people do off market transactions. And so they've become more common, especially over $1 million. So I'm going to talk to you a little bit about what's going on in the off market luxury segment. All right. So in January, there were 72 closed transactions in the MLS over $1 million. And off market, from what I could find, now I don't have full visibility, so there's definitely transactions I missed.
Right.
But even just what I saw, 21 closed transactions over $1 million, so that's 23% of the market of over $1 million in Austin happened off market, and it's definitely higher than that. That's a large chunk of luxury properties transacting off market. Just to show you a couple other stats, 107 new listings on the MLS of over $1 million in January. 93 off-market new listings. Now, this is what I filtered my email to find, other agents who had sent me stuff and counted them up. There's other stuff that probably came across via text messages, or I was on the phone with an agent and they said, hey, I have this thing, and it just didn't fit for any of my clients, so I didn't write it down or anything. But that's how this is happening for us as agents, is when we're talking to other agents, it's, hey, what else do you have?
What's coming up?
If I have all my buyers in mind,
right,
and I'm like, okay, does that check any boxes for anybody?
Yes.
No. And I don't think about it. So if it does, then of course we further the conversation. So if you're not in contact with an experienced agent that is out there looking for you, then you're missing something. So here's what I see happening to a lot of people. They're checking Zillow and they're looking for something, and then they're waiting for that to pop up before they reach out to an agent. Well, they're missing a whole segment of the market because they're not in contact with their agent early. Getting in contact, it could be a year ahead of time, because we have strategies right now where buyers, we just got notified about a new construction opportunity. We have a couple of those coming, whether it's downtown condos, houses in Southeast Austin and other parts of Austin, where we could potentially get somebody under contract, lock in a price 6 to 36 months before the project's complete. Mm-hmm. And maybe that's good based on somebody's planning. They're like, well, I'm not moving down there for a year. Great, let's find something that fits that timeline. Now, it doesn't work for everybody, but potentially that's an option. So that's why it's important to talk to your agent really early in the process and make sure they know what you're looking for and you get everything squared away.
Yeah, it's access to the off-market data that's really the key.
Yeah, and 18 of those ended up on the MLS. So some of them do end up going on the MLS because
Right.
they didn't get enough traction off market.
Right.
That's mostly luxury is what we're talking about. There's certainly more opportunities in that part of the market because of the dynamics of off-market listings that we chatted about. But even under $1 million, there's some of these new construction opportunities, and occasionally something else. We just get a random email from an agent. To your point about agents they want to work with, they have a listserv of the agents that they know can get deals done,
Right.
and they blast it and they see if they can get enough interest from that before they have to move on to going to the MLS or what other source they might try.
Yeah, one of the other things we do for our clients is we'll scout the area. Oftentimes there's, builders, developers putting things up. It's not on any type of network, any type of list. We'll proactively reach out. What's going on with this property? Is it something we might be able to put an offer in on? That's the challenge now. Historically low inventory, you got to go out there and find it. And in some cases develop it, and that's why we do some development deals as well.
Yeah, and even broader contact of potential sellers that we've done some special projects for clients that have more specific needs, and we're very proactive about reaching out to people in their target area and trying to see, hey, is anybody thinking about selling?
Right.
Because if they're going to be selling in 3 months, maybe we could be the first in,
Yes.
get an offer in before they even have a chance to put it on the MLS, sometimes even before they've even hired a listing agent, and giving our buyers an opportunity to do that. So if you're in a situation, it might be worth us chatting a little bit more and seeing if there's something like that we can do for you. All right, let's talk about the top real estate news stories.
In our market recap, the forecast for 2022 that we did last month, we had, what are the top 3 stories from last year. What we're finding is that the current stories in January of 2022 are echoing a lot of the same themes that we brought up last month. And this is a case in point, David, the Cap Metro Orange Line. We all know that Project Connect, but there's money coming in from a variety of places. The FTA, Federal Transit Authority, authorized a $750,000 grant for a portion of Cap Metro's upcoming Orange Line, which is great. It's keeping things moving forward, and I know that you're our in-house Cap Metro expert.
The Orange Line is the one that's set to go currently, I believe, from Stastny, and future expansion will be down to William Cannon or Slaughter. And it's going to go straight up SoCo, somewhere, they haven't determined where, what we call South Congress, where Torchy's is, in that area down to, Equinox. In that zone, it's going to go underground and then end up in a downtown subway tunnel where it meets up with the Blue Line. So they'll run together for a little bit, then it's going to continue straight north. the blue line goes and splits off northeast. Pretty exciting to me that this project's happening. It's great. We're going to get the federal government to pay for a big chunk of it.
Yeah.
It's like 40 to 50% is coming from federal funds, which is pretty cool.
Okay, so now we're going to look at the second big story, and it's all about inventory. And fortunately, there are some projects slated to break ground, and we just got some big news: 4,000 homes. Project is called Mirador. It's a $500 million project covering 400 acres. It's going to be 2,500 homes, David, 1,500 multifamily. There's going to be commercial space in there. What do you think about the location? What's the impact?
I mean, the city's just going to keep growing in every direction. So this is an area that past the airport, there's not a ton going out there. Like, there's farms out that way.
Right.
Stuff will start to develop around there. I think there's some other developments not too far from there. And one of the issues is grocery stores and things like that. And,
Right.
and that'll all come with time. You look at even as simple as West Avenue, which goes right by the Cirrus Logic campus downtown. That was the western boundary of the city at one point.
Mm-hmm.
And now, like, that's just in the middle of downtown. And so that's obviously going back 100 plus years. But I think that's going to continue this trend of when I first moved to Austin, where some of my friends live in East Austin. Like, I'd never even been there for the first 4 or 5 years living here.
Mm-hmm.
And then now all of a sudden that's like a hit place with cafes, and that's all going to just continue pushing out. One thing I think people think about, whether it's this or probably more so, is the downtown condo towers. When they see them all going up around them, they're like, oh, well, prices are going to go down. We're building so much. The reality of it is we cannot increase the inventory, the supply, by anywhere close to what we need to.
Right.
The other illusion about the downtown building is that it's a mix of condos, apartments, hotels, office space, retail. And so every building you see is not a condo. In fact, for condo sales, the supply change is quite nominal. We've got really 2-3 buildings if you count 17th Street as part of downtown. Technically it is, but a lot of the people in my circles, they don't go think of 17th Street as downtown. So really 2 main buildings on Rainey Street that are going up. Nothing else in the rest of downtown. A couple hundred units that are going to be delivered in the next 3 years. So the Modern, which will be in our email newsletter announcing that, is set to be delivered in 2025.
Mm-hmm.
So those are the only real luxury condos in the next 3 years that are being delivered. So we got 44 East coming up now. 48 East is going to be delivering a little bit sooner than that. May already have some move-ins there. 48 East is a little bit different dynamic because it's an Airbnb hotel. 44 East, though, being a luxury high-rise tower that has, somewhere in the 200 to 300 unit range, similar to what the Modern's going to be, just up the street there on Rainey. Those 2 buildings, there's one delivering now and one delivering in 3 years. These projects take a long time.
Yeah.
So if it hasn't announced yet, it's probably not going to deliver before that unless it's a really short, building or something with not that many units. So most of the projects that are coming are a ways out. And with several thousand units downtown, adding the equivalent of 100 a year is not going to impact put any downward pressure on prices. In fact, anecdotally, in addition to those off-market stats, I hear all these sorts of stories. One recently was a unit at 70 Rainey that sold for $1,500 a square foot. But it was only a couple of years ago where it felt like $1,000 a square foot was crazy.
Right.
Before we know it, we're going to have $2,000 a square foot as like the norm downtown Austin. That's a possibility. Mm-hmm. And there's not that many more sites. There's a lot of buildings going up, and there is room still, but there's not that many more sites once we get past this next phase of development over the next 5 to 10 years to add downtown condos. Yeah. We're going to run out of space.
And just in terms of the time frames, this particular project, Mirador, they're anticipating sales will begin in about a year. So now we go to our number 1 story. Again, the theme from the recap last month was the inbound migration of tech dollars. And here we go again. Meta, formerly known as Facebook, they just signed a lease for the tallest building to be constructed in Austin, 589,000 square feet across 33 floors of the skyscraper. Largest lease ever signed.
33 floors.
Right.
It's pretty nuts.
And it's going to be mixed use, so there's going to be a lot of residential in there as well.
Yeah.
You can imagine that work-life balance for those folks.
I mean, I've even thought about going and renting an apartment in this building and just being in the tallest building in town, great views. It's 6X Guadalupe at the corner of 6th and Guadalupe, just north of the old post office. You've probably, if you've driven past it, seen this thing going up. I mean, it is towering at this point, just mostly glass, and it's probably halfway up at this point. It's got a lot to go. It's going to be about 800 feet, if I remember correctly. Comparing that to the previous tallest building, currently the Independent, in the 600-foot range. And we have buildings announced already that are going to be taller than that. So it will be the tallest building for, a year or two.
A little while.
Yeah. Let's talk about some questions that people are asking. Can home prices keep going up? Last month we talked about affordability in Austin. We compared it to some other markets. Go back and check that out if you're curious. Let's talk about how the volatility in the crypto market can affect real estate in Austin. We have a lot of the people we work with are millennials. They're into crypto. They're thinking about buying homes, and they're thinking, oh, this thing just crashed. People lost a lot of money.
Right.
What's happening? Is that going to affect the real estate in Austin?
So the total value of all cryptocurrencies, this is as of just a couple of days ago. Keeping up with the stats, fast-moving market is a challenge, but as of just a couple days ago, January 28th, cryptocurrencies was tallying out at about $1.7 trillion, and that was a substantial fall from the previous high, 2.9 million, just
2.9 trillion.
2.9 trillion.
And this just compares so you can get a sense of how does that size up against some of these other markets. So U.S. commercial real estate, 35 trillion, residential, 36, the bond market, even bigger at 46 trillion, and the stock market at 52 trillion, and then crypto down there at 1.7 trillion.
Right. So when we take a look at what is the impact going to be, a lot of times it's not even the actual scenario unfolding, it's the news of the scenario unfolding. And I think with crypto being such a sexy, hot topic, that volatility ties into, the natural human fear, concern about what's going to happen, the uncertainty of it all. Clearly with the inflation rates going up, what's going to happen with crypto. And we're going to break it down just a little bit here so we can get into some of the additional details. So one of the things that we look at is where are the people buying real estate investing? And so we can see that 55% of the adults in the U.S. are invested in the stock market, whereas 16% say they have either invested in it, traded in it, been involved with crypto, but aren't necessarily holding it themselves. So when we take a look at that percentage, so it was 1.7 trillion currently. You've got 16% of 1.7 trillion, and then 55% of over 100 trillion added together. So the impact of crypto, even if it were to crash, we actually have some quotes from an insider. So Reeve Collins, co-founder of BlockV, which is a leading platform creating highly programmable and customizable digital assets, told the Go Banking Rates, which is where we got our data, that Bitcoin is continuing to unleash new ways for more people and people who have never had access to banking to pay and connect with global ecosystems. So these are his quotes.
It's important that Bitcoin be treated as a portfolio diversifier for people to have continued access to this currency and the technology that comes with it. Because it's a young asset and because it's only being adopted now in a big way, it is to be expected that there'll be correlation with equities. But longer term, this adoption will likely play out in a way in which Bitcoin will be seen as a hedge, and thus the correlation with equities will diminish. BlockV's Collins is optimistic as to Bitcoin's outlook in 2022, despite the Fed's tightening of its monetary policy due to inflation, which in turn have triggered broad-based sell-offs in both equity and crypto markets. This is to be expected, Collins said, but at some point, perhaps even now, the selling will be seen as too strong a reaction. And as things calm, we will again see major price growth broadly in crypto. So if you look beyond the next year or so, Bitcoin in particular is poised for strong growth. And that's exactly what we've seen, is that even in the last 24, 48 hours, prices are up 10%-ish, something like that. They're already bouncing back, and equities for sure have bounced back. And anytime there's any of these stories, I think the real concern is consumer confidence.
Right.
Somebody feels poorer because, they look at their 401k or their stock market brokerage account and, I'm down X percentage, X dollars. Should I go be buying this second home or buying a bigger home in Austin, whatever they're thinking of doing. In reality, those were hopefully funds that are not touching until retirement, which is a ways off. If somebody had their down payment for their house sitting in stocks, that wasn't a very good planning thing, because money that you need in the next 6 to 12 months should never be in stocks. So in my opinion, any of these stories, which is FUD, fear, uncertainty, doubt, that's being spread. Oh my gosh, the stock market, growth stocks are crashing. Is everything going to zero in crypto? These things, they're independent for the most part of the Austin real estate market, and they're just buying opportunities. Let other people be scared. So there's a few less buyers out there to compete with because the fundamentals of the Austin real estate market are so that it's going to take a lot more than some FUD to get it off track and create downward pressure on pricing. We're going to need some heck of a black swan event to make any sort of dent in what we have going on here in terms of prices and appreciation.
Yeah, so the takeaway is that you want to have a balanced portfolio. Crypto is a good element to have depending on where you're at in your wealth creation strategy. Bottom line, though, David, is it going to impact the Austin real estate market? Maybe in some very small segments.
Yeah, there might be individuals who it affects.
Definitely affects some individuals, maybe on some speculative, real high-end type properties, kind of undercut a little bit of the demand. But for the broader scope of the market, we're not expecting crypto to have a significant impact one way or the other.
And the other thing is these things can move so quickly. You know, we might be recording in 2 months from now saying, well, we're back at all-time highs and everything. The market continues to rocket, so we'll see. I'm excited to see what happens.
So what we're looking at here, the question is, will prices continue to rise? It really depends on your perspective. Look at this chart. You'll see if you had a 6-month window, you bought a property you had to sell in 6 months, there's a risk it might drop. If your holding period is 10 years, you're not going to find a 10-year period where it drops from the beginning to the end. So there's only one form of risk in real estate. It's called time. The more time you have, the less risk you have. Just want to thank everybody for joining us. We are continuing to track the market. Basically, in summary, what we saw at the end of last year is holding true the beginning of this year, and we'll continue to report to the best of our ability and try to give you the insight that will benefit you in your own personal real estate journey, whether you're buying, selling, or investing.
We're going to be getting market updates to you the first business day of every month, so make sure to subscribe to our YouTube channel so you get notified. If you don't get our email newsletter, which has the video link plus some additional information, please email the team and let them know that you're not getting it so we can make sure that you're getting it. Go ahead and like the video if you got a lot out of it. And even better, share it with a friend that's thinking about buying in Austin so that they're aware of what's going on in the market. And please comment below with any questions that you have, and we'll make sure to get them answered. Thanks for joining us. We'll see you soon.
Thanks, everybody.